listen-only mode.
Good afternoon, everybody. This is Stan for theartofchart.net, and we are doing a webinar today. The webinar is on trade execution. Many of you have been asking for this webinar because it's like, how do I best use the information that you and Jack provide? How do I best set up a trade? And people ask questions about entries and exits all the time. So this is really in response to what a lot of you have been asking for. So what I'm hoping to cover today, and Jack will be joining us a bit later in the broadcast, by the way, so probably in the next 20 or 30 minutes or so. He has a personal matter he's dealing with. And so what we're going to cover basically are these 8 things in the next 30 or 40 minutes. I want to encourage questions, okay? So there's a questions tab. Please put your questions in the questions tab as we go through the webinar. But, trade execution, how do you see a setup? And then how do you enter a trade once you see a setup? What setups are good setups? What setups do you have to understand perhaps that there's greater risk in, and maybe you don't trade it? I think that's probably a very difficult thing for traders very often, is to know when not to trade. Okay, I think the bias that a lot of people have in trading, frankly, is you trade every single little wiggle. And that's not good for your account, in my opinion. So, learn how to see good setups and learn how to enter those setups. I think that's key. How do you set a stop? How do you determine position size? That's pretty easy stuff. A lot of you probably know that. I'll touch on that briefly. But then I want to get to, okay, so you're in the trade now. So when do you go to even stop, okay, on the trade? When do you lighten your position size? When do you add to your position size, okay? When do you go to a trailer size? Okay, where in the trade is it mature enough where you say to yourself, hey, I should be small here? And how do you recognize when to do that? And then when and how do you actually exit? Okay, so I'm coming at this more from a swing trading perspective than a day trading perspective. I can go over some day trading stuff as well. They are different, in my opinion. So that's what we're going to cover, plus anything else you guys want to raise. And at the end, what I'm going to do is a walkthrough of the markets. I think what Jack and I are going to add to these webinars is at the end of the webinar, we'll do a quick overview of where the market is. We'll cover just indexes, gold, and oil, and the US dollar. So our disclaimer, as you probably already know, everything we do on theartofchart.net is for educational purposes only. None of what we do here is intended to be a trading recommendation of any kind, okay? So these are educational workshops, these are educational materials that we provide, and we hope you guys benefit from it. So that's the introduction. Let me do the following. Let me put up a chart of the S&P 500, and we can actually get into identifying setups and trading setups. Now, first of all, what is a setup? A setup is something where you have a better than 50-50 chance of being on the right side of the market. I think trading is always about being on the right side. Okay, and so one of the things we have to get really good at as traders is learning to recognize reversal patterns. Okay, reversal patterns, when you see them, you have to recognize them because that's part of a setup. Okay, now let's look at the S&P here, and what I'm going to do is I'm going to go around to a couple of different instruments, and we'll look at the instruments, and I'm going to ask you guys questions. Okay, I'm going to walk through a couple of trades here on the S&P, and I'll ask you guys a couple of questions about, would you enter this trade? Why would you enter this trade, etc. So let me cover some basics. Okay, so the first thing is a setup. Now, there are a couple of favorite reversal patterns that Jack and I use a lot. Now, I'm going to use this area up here. If you remember, when we were up here in this area, Jack and I were talking about 2120. And here we were at 2116. We didn't quite get our 2120 target. We had higher numbers even, and we were looking for a pullback in 3 waves and then perhaps higher prices, okay? And so there is no setup right here, okay? When we're at a high like this, and only if you are a really good trader are you going to get in on this bar or on this bar, because frankly, there's nothing to work off of. Okay, and lots of inexperienced traders try to catch tops and bottoms, and I'm going to tell you right now, guys, it's a waste of time. It really, truly is. Wait for the reversal pattern, okay? Wait for the retest, wait for the reversal pattern, and that's going to give you your best entry. So here's a reversal pattern. This is an example of one. Here's a shoulder, Okay, here's a head, and then you can see another shoulder forming here, and you can see the beginnings of a trend line because you would have this high, and here we are at resistance. Okay, so your entry isn't here. Your entry is all the way down here. Okay. Maybe here as well, okay? So, you wait for the reversal pattern to set up. So we've covered reversal patterns before, okay? And they're on the website, and you can look them up. If you scroll down and you look at old webinars, you'll see that we talked about reversal patterns and things like that. So the reversal pattern here, there's a head, there's a shoulder, there's a head, there's a shoulder. So in this area, you're gonna take your entry, okay? So let's talk about how to take an entry in this area and how you would trade it, okay? Now, and what I'm going to do once I give you this example is we're going to go to other instruments and actually go through current setups that are right now possible, okay? So this is more of a introduction, and once I get through with the introduction, we'll actually go and actually do some real setups in real trades right now, okay? Now, the first thing I do whenever I see a potential setup is I say, what's happening on a daily basis? What is the ATR? The ATR on this day right here was, roughly speaking, 20. Okay, I'm just going to call it 2021 or so. ATR right now is 24, by the way. So what I do, and the reason I use average true range, okay, average true range, you can do a 5-day average true range or a 3-day average true range, okay? I use a 5 because it tends to smooth it a little bit more, okay, on the S&Ps. I use a 3 for other types of instruments that are more volatile. Average true range is an excellent indicator for volatility. So for example, what would your stop be here if you were going long? I was long on this day at 1842. Okay, after the limit down, I got long 1842. What was my stop? Well, I looked at my ATR. My ATR on that day was like 59, I think, or 60 or something like that. My stop was 20 handles. Why? Because I use 1/3 of a daily ATR as a stop. Now, if you have this kind of volatility, okay, look at how high the volatility was here. The volatility was 74. Guys, you use a 2-handle stop, you're going to get taken out and you're going to give a lot of money back to the market. So your stop system has to vary according to volatility. Okay, that's a very important point. So on this day, my stop would have been 20 handles. So my stop was, if I remember correctly, I was long 1842 and I set a stop at 1820. It was a great trade. I mean, I got out 90 handles later, okay, with a very nice profit. Now, that was just one of those once-in-a-lifetime trades that you do once every 5 years or whatever, right? On a day-to-day basis, it won't be quite that dramatic. It's going to be more basic. So here we are with an ATR of 21. Okay, what's 1/3 of 21? Well, it's 7 handles. So my stop is going to be 7 handles on the trade. So I go back to my hourly chart, and let's say that I'm here or here, okay? And let's say the high here, let's say we're at 2103 or 2104, okay? What's the high? The high is 2112, okay? That's roughly 8 handles, okay? So I'm looking at a 7-handle stop, and here it is, it's an 8-handle stop. So I'm thinking to myself, if I'm gonna do this trade from a swing perspective, what I'm gonna do is I'm gonna put some on, and I'm going to look at an 8-handle stop, 8.5 handles. I'm going to set my stop 1/2 of a handle above the high. Now, why? Because I got 8 handles here. I mean, this could double top. Okay, so I want to be above the high. Number one, it's only 8 handles, so I'm willing to make that investment. And what I do is I look at my account size. Okay, and I look at my account size and I say, if I'm wrong and I lose 8.5 handles, okay, what is 2% of my account? I'm willing to lose 2% of my account. Now, the way I think about that, just so you understand, it's like playing cards, okay? You guys have played cards for money, I assume, right? Poker or whatever. It's the ante. Okay, what's the ante to play cards, right? It's like whatever, depending upon what kind of game you play, it can be any amount of money, but an ante to make a trade for me is 2 to 3% of your account. And so here I have 8 handles, and I say to myself, okay, I'm setting an 8-handle stop. What's 2 to 3% of my account? Now, if I have a 20-handle stop, guess what that does to my position size? It makes it a lot smaller. by the way, if I am trading in this kind of volatility, should I be using my normal position size? And my answer is no way. Your position size should be smaller. So your position size should vary according to volatility. How do you vary your position size? Based on what you're willing to lose. If you're willing to lose 2 or 3% of your account, well, that's appropriate in my book. That's appropriate. That's an ante to make a trade. Okay. Now, going back to the hourly chart. So let's say we get in here because I see resistance, I see this previous high, and I set my stop above, and I'm 8 handles in, right? And it goes in my favor. Okay, it starts going in my favor. Now, how do I know when to start legging out of the trade? Okay, now let me try to give you a little advice around this. What I do is I look at the previous swing. See the previous swing here? I pick basically this previous swing and I say, where is there a 50% fib? Okay, now let me show you what I do. I would probably go from not all the way down here. I would probably look at a short-term trade here, and I would say from the X to the Y, this swing right here, okay, that just happened, where's the 50% fib? Okay, and the 50% fib comes in at 2066. Okay, so what do? When the trade hits 2066, I put my stop at even. Okay, so if I got in right here, okay, because I hit 50% here on the W, let's just say, okay, what have I done? I haven't taken anything off the trade yet, and I'm at W. Okay, so what do? I take off 1/3 of my position size, I put my stop to even, and I let the trade go. Okay, this is a very, very important point. So, you know, you don't keep your stop up here above your high here. Okay, you don't just keep it up there for the entire trade. If the trade goes against you, you know, at least you have 1/3 of a handle or a third of a position in profit. Okay, so from this W, for example, this could have very easily have gone to new highs. Okay, so what do? When you hit a 50% swing right here at the W, you take off 1/3 and you put your stop to even and you let the trade run. Okay, now what do you do then? Well, here it goes against you, and what do? You do nothing. You let it go. Why? Because you're letting the trade go. And this is a problem that a lot of traders have. The trade starts to go against you, and then you start getting worried, and you're like, oh my God, I'm losing my profit. Well, taking 1/3 helps you not do that. You bank some. Okay, it goes against you. You wait. You do nothing. You have a stop at even. You let it go. Okay, and then it goes the rest of the way. And while you're in an impulse, okay, and what I do is this. This is very simple and straightforward, and there's no magic to any of this, guys. It's very simple. Okay, you draw a trend line, and you say, when I break that trend line, I take off my other 1/3. Okay, now right here you could say, oops, broke the trend line, I'm taking off another 1/3. Great. What you do is you take off 1/3 right there, and you're down to 1/3 now. Okay, you've gotten quite a bit of profit. You let it run. When do you take off your last 1/3? When you see a reversal pattern. Okay, there is a little small mini head and shoulders here. So on this bar or on this bar, I would have taken off the last 1/3, definitely by this bar. Okay, and so that's the anatomy of a trade in terms of recognizing a setup. Okay, knowing when to enter, setting your position size, knowing when to move things to even, knowing how to take off part of your position. Okay, and I do that again and again and again every single day. Okay, and it doesn't matter how much volatility there is in the market, because the system I have works. A lot of people get scared trading. They get afraid. They get afraid of volatility. Like, for example, if you guys remember this day here, this was probably the first limit down that's happened in, boy, how many years has that been now? That's been 7 years since we've seen a limit down. Okay, so folks aren't used to that. You know, we had multiple limit downs a day in 2000. Okay, during the dot-com debacle, it was just amazing. There was one day we had 3 limit downs in one day. It was absolutely ugly. Okay, but this hasn't been seen in a very long time. So people get afraid. But if you have a system, guys, you have something to lean on. okay? And that's what you need to develop for yourself. I'm sort of introducing you to mine, okay? And I'm going to go through a couple of other setups, and I'm going to show you the other setups that I do. And we'll get into this in a little bit more detail, but that's just a basic introduction into entering a trade and exiting a trade and setting your stops and lightening your position, knowing when to go to trailer size and knowing when to exit. So, and by the way, that was a great trade. That was a great trade. I mean, it was a nice setup, great trade, pretty easy trade. And we'll talk more about setups in a minute. So what I'll do is I'll just look at questions now as I just did that basic introduction. What if you can't afford a 7-handle stop? Then you need to go look for another instrument to trade other than ES. Okay, so I think a 7-handle, well, let me put it to you this way. There's swing trading and there's day trading. Okay, so if you're day trading, you use a different system. Okay, you might set, based on volatility, you might use an hourly chart, for example, for your ATR. And then you could adjust your number of handles for your stop, but your handles should always be based on volatility, okay? Because Brent, I'm going to tell you right now, if it's not, and you always use 2 handles, what will happen is you're going to get stopped out when the market gets volatile. And by the way, when the market gets volatile, that's where you make your money, okay? That's where you capture your the most handles, of course. How to find the ATR? The ATR is a standard. It's average true range, okay? And so every trading instrument that I know has average true range, and average true range is an indicator of volatility. So you look at your instruments. Okay, these are my instruments. You go to add instrument, right? Here we go under indicators. Right there it is, average true range, and every trading system I know of has it. Okay, so now if your trading system doesn't have it for whatever reason, another way to do it, which isn't really the average true range formula, but it's close, is you take 3 or 5 days of the previous days, okay? And you go back 3 days and you look at the range for each day, and you take that and you add all 3 ranges up and you divide it by 3. That gives you your average true range, okay? Well, that's not really average true range. That gives you your average range. Average true range is a slightly different calculation, but anyway, I think average true range, I don't know what I would do without it. It helps me see volatility. I think it's a better indicator of volatility than the VIX, frankly, to be honest with you. Okay, for later, how do you handle the overnight moves which seem to eliminate retail and make the stops much broader? Okay, Steve, let's talk about that. I think it's a great question because if you trade ES, there's an old saying about ES, okay? The S&P is the dog and ES is the tail of the dog, okay? And so a lot of people base their trading on the S&Ps and then they try to trade ES, but ES sometimes misbehaves, right? So let's go back to Sunday. Here is Sunday right here, okay? And we had the terrorist news, if you guys remember, from France, right? And at the end of the day, we had that push lower in ES, right? Now, this was something we called. We called this, we called this weeks ago, and we said, we're going to go see 2022. And when we hit this area on Sunday morning, I said, we're going to turn and we're going to go up to 65 to 70. So the other thing I failed to mention, I was just really getting into the mechanics of trading, okay? You got to have a thesis. You got to have a thesis as to what's next, okay? And what we were looking for on Sunday was this monthly pivot right here at 2022 would be support, and that we would find resistance up here somewhere, okay? And that we would get a pullback, which we did get, by the way. And then the next day, I think it was Tuesday, we said, oh, we have support here at the weekly pivot, okay? We need to get long right here, and we've been long since then. And I hope if you did get long, based on what we said, that you are now trailer size, okay? Now, to answer your question, Steve, let's go look at the ES tick chart. So here we are on the S&Ps, and it looks, well, wow, look, the monthly pivot held. But if you go to ES, ES really misbehaved, okay? We got the dump. Now, what I can tell you is this. If I'm looking at, first of all, I don't like to hold, I can't say that. Certain instruments I don't like to hold over the weekend. So like oil, I don't like to hold oil over the weekend. I don't like to hold natural gas over the weekend. Okay, I've seen too many times over the weekend where we get news like a war or terrorists or something like that, and then, you know, oil is a geopolitical instrument as far as I'm concerned. It just goes places when there's bad news on the weekend, and if you're on the wrong side, it'll just jump over your stop. Okay, so but you know, the S&Ps, I would be willing to hold this over the weekend. So, you know, let's say we look at ES and we want to get into a trade in ES because we have this square here, which we said expect a marginal new low at 2010, right? And if we were looking to get in around 2010, well, that would have worked out okay. But let's say we got in up here. Let's say we got in at the monthly pivot at 2017, okay? And let's say that our stop was 8 handles, okay? Now, Steve, what happens is in trading, and let's say that we then take our 8 handles and we say, okay, how many contracts would be 2% or 3% of my account? Okay, and let's say we decide that's 3 contracts. 3 contracts and 8 handles equals 2% of my account. Okay, so what happens here is we get taken out. We get taken out on the open on a Sunday. And at that point, you have to decide, what are you going to do? Are you going to wait, or are you going to get in the trade right now? Now, personally myself, I don't personally rush into trades. I wait, okay? So I wouldn't have gotten into a trade on Friday based on the news. I would have waited. I would have gotten into something here if I had that opportunity. Okay. What I would say is this: if I got into the trade on Friday and then I get surprised by ES and boom, I'm out of the trade, I wait until I get a signal. Okay. And by the way, the first thing I want to say is this: there isn't really a good reversal pattern here. Okay, on this trade. Look where the low in RSI is. That's not a real good reversal signal. Second of all, there's no double bottom here. There's no head and shoulder, inverse head and shoulders. So, you know, I would have waited to get into it. But let's say you got into the trade. Let's just say, for example, Friday you got into it, you get taken out. While you wait for the reversal pattern, and you look at yourself in the mirror and you say, oh, look what I did. I got in a trade when the RSI was at its low peak. I know better than that, okay? And you typically don't enter a trade there because that's a low probability, okay? You wait for a divergence or of some sort. It's a much higher probability trade, okay? So let's just say I got taken out. I lost 8 handles. I'm down 2%, okay? I don't hop back into the trade. I wait for a signal. Now here, I could say, okay, I can see here a potential little inverse head and shoulders. Do you guys see it? Shoulder, head, shoulder. So right here, which was the Monday open, there's your opportunity to get long. I believe that was the Monday open, if I'm right. Yeah, 9 o'clock. So there's your opportunity to get long. And what do you see happening there? You see the monthly pivot as support. So what do? You get long and you set your stop 8 handles lower. Okay. Or whatever the ATR is at that point, and you make your money back. Okay, you make your money back. So ES is a bit difficult to trade, especially over the weekends. If you see a structure like this that's going straight down on a Friday, there are a lot of traders that are like, oh, it was a trend day. Let me just get long on Friday and I'll hold a long over the weekend. That's not a wise move, guys. That's like a high-risk trading opportunity. And why would you add risk to your trading? I mean, the purpose of trading, guys, is to find low-risk setups. That's what you want to do. You want to cherry-pick low-risk setups. This is a high-risk setup. You know, you wait for this right here where you get the pullback and you have a bit of a reversal pattern and you've broken this RSI trend line, okay? By the way, RSI trend lines, if you don't use them, here we are, we're in a trend, right? Here's a setup for you guys. Okay, here's another setup to look for. All right, there's the trend, right? Would I have gotten long there? Hell no. I wait for the trend to break. The trend breaks in 2 fashions. First, it breaks RSI, and RSI breaks long before the price trend line breaks. So right here, it breaks. I get the lower low in the morning on Monday. There's my entry right there, okay? And then I get long, and then what do? I wait for my 50%, Let me just go through the same sequence. Here's the swing. I'm sorry, let me do that again. Okay, let's try to do this right this time. Where is my, okay, let me draw a fib here. Come on, here we go. All right, so there's your 50%, which is roughly at 42s, okay? So I wait till I hit 42s, and by the way, I would have hit it on Monday, right? And then what do? I get out of, I take a third off, and I put my stop to even, which would be up here at 2017, and I let the trade go. It goes against me. What do? I do nothing, okay? My stop is at even. My stop is at 2017. It's at the monthly pivot. By the way, you want to see me hold a trade? Let me hold a trade with the at the monthly pivot. I'll hold it forever. I'm serious, because there's so much that happens around monthly pivots on every instrument. I mean, very often you see a back test to the monthly and it goes, okay, or the opposite, okay? So, you know, here you hold the trade, you hold it, and I would wait until you get an RSI trendline break. So right here, I would have taken off a second third, and now I'm holding a trailer and I'm waiting. And what we're looking for here, by the way, just to show you the chart, is we're looking for roughly 2100s, 2095 right now. That's our thesis as to where it will turn. Our thesis could be wrong, but that's our thesis at this point. Okay, so let's go to a couple of other instruments and look at setups. Let's look at oil. Oil is a great instrument to trade. I love trading oil. And let's go through the same pattern in terms of looking for setups. Okay, I'm going to ask you guys a question this time, okay? And let's see you just go ahead and put an answer or two into the question box, okay? All right, first of all, is there a setup there to trade in oil? What setup do you see? Let me just make this a little larger so everybody can see it, and maybe expand this a little bit. Okay, so there you go. What do you see? What's the setup? Is there a setup there to trade? Okay, Steve says there's a triangle. Brent says there's a double bottom. Boy, guys, I tell you what, you're right on target. Now, do you trade it? Would you trade it? I see two patterns there. Would you trade it? Okay, and what would you do, Brent? There's no right answer here, by the way. Okay, so at this point, if you were going to trade this long, this would be, would you agree this would be not a bad place to enter? Yeah, breakout and wait for retrace. Yeah, it's not the best. Yeah, so see, this is the point, Brent, I'm trying to make, okay? I would not put a damn thing on right now. Why? You got two patterns. You have a triangle here, okay? By the way, the triangle has a 70% chance of breaking down. Okay, that's set up right there. And that's a classical triangle. That's not an Elliott triangle. So that has a 70% chance of breaking down. And oh, by the way, our thesis is we're going higher. Okay, we're going up here to 47, 48. So I have competing patterns. And do I put something on right now? Well, if I do, I'm not going to lose 2% of my account. I'm going to put on a very small position just to try it. Okay, if I trade it at all. Okay, now let's say I'm going to trade this long. Okay, and let's go through the process, because I'm going to illustrate the process again, because I know there's some of you out there that probably haven't seen this before. I look at ATR. Let's put ATR up here, average true range for oil. Let's just go figure it out real quick. All right, and the ATR for oil right now today is 164 ticks. Okay, so 164 ticks. Typically, what I would do with that kind of volatility, I'm going to use a 20% stop on that. So that's like a 32 tick loss. And I don't like to lose more than 30 to 50 ticks in oil. Okay, if I lose 30 to 50 ticks, I've done a bad setup, or I've taken something that's too risky. You know, so I'm looking at like a 30 to 50 tick loss potential. I look at my account, and in this particular case, I say, do I want to lose 2%? No. I'm using a smaller position size because there is risk here. This is not an easy trade, okay? So we're looking here at, what's our current price? 41.85 with a low at 41.25, okay? So there's some risk here, okay? I can't set a stop below this low. given the ATR that I just mentioned. So risk reward here isn't great. Okay, so if I were to enter, say, on this bar or on this bar, that would have been much better, because then I could have set a stop below a low. And I like to use stops below lows as much as I can. So let's imagine for a moment that I was going to take this trade long, and I was going to take my stop at, let's say, 35 to 40 ticks. Okay, so I get long, I put in my stop, and I'm waiting now. And I'm waiting to see what? I'm waiting to see a 50% move. Okay, so when do I set my stop to even? And let me just show you. Okay, 50% of the previous swing is right here at 43.47. And by the way, 43.29 is where I believe we may land for a back test. That's why this little box is here. So, isn't it amazing that the 50% marker is very often where the market back tests to, okay, and then it goes lower, okay, very often. So, I'm long, I got a 35 tick loss, 40 tick loss, and what am I doing? I'm setting a stop, I'm going to even stop here, and I'm taking off a third, okay? So if I enter here, which is 41.73, and I'm getting out here, that's $1.50 in oil. I take off a third, I set my stop to even, and I let the trade go. Okay, I let the trade go. Does it go against me? Do I do anything? No, I let it go. Hopefully, I've done my technical analysis, and I know the monthly pivot up here, which tends to be a magnet at 47.91, that we're going to go visit that. Okay, and what will I do? I will wait until, like, for example, this triangle. By the way, guys, this really looks like a triangle. Look at the compression in RSI, okay? And I know, Brent, I'm walking through this on the long side, but I think we may have a more of an opportunity to the downside here. But let's just say that RSI ramps up at this point, right? I'm going to draw my RSI trend line like that. This will ramp up, ramp up, ramp up. We'll go up here to 43s. I take off a third. When the trend line breaks, I take off my second third, okay? And then I wait to take off my last third, okay? What RSI value are you using for your hourly chart? I believe it's 14. Yeah, right here in the corner, okay? It's based on the close, and it's a 14, okay? So, and so getting back to what we were talking about in terms of lightening your position size, you wait for a setup, you wait for a quality setup. This is not a quality setup, okay? And again, traders, in my opinion, very often, especially if you're starting, you want to be in on every trade, or you're afraid you're going to miss out. And guys, it's better not to trade. It's better to have a 70% win ratio than it is to trade every trade and churn and burn, which is what all the brokers want us to do. All the brokers want us to do is put on lots of trades. They get lots of commissions, and our accounts don't grow at all, right? Which is not what trading is about, in my opinion. Okay, so that's oil. And I think the lesson here for oil, I just walked through the same process again, guys, to show you how to enter and how to exit. But again, I think the main message here for oil is, at this point, I wouldn't trade it. Okay. Now, let's talk about trading a breakout. Okay. Now, if I'm trading a breakout, let's say that we have price moving higher. Let's say tomorrow morning, Brent is right, and this breaks to the upside. You see where the blue line is right there? We break up. Typically what happens in a triangle is this. You're going to break up, then you're going to come and you're going to back test the trend line, okay? On the back test of the trend line, that's where you get long, okay? That's another setup, okay? So breaking out of a triangle, back testing the trend line, and by the way, if we break to the downside, it'll do the same thing. It'll break to the downside, it'll come back, it'll back test it, then I would get short if I wanted to do the short. Now, folks, I would not trade this to the short side. And why? Because our thesis is we have lots of upside and minimum downside. So why would I want to short oil right here? If I'm day trading it, that's different, okay? Day trading oil is different, okay? Swing trading this, I want to capture the swing. The next swing is higher. So, I'm going to wait for the setup for this thing to go higher. Now, what may happen is this, and this is the ideal setup for oil that I would be looking for. Let me just kind of go over this. And watch the blue line, guys, okay? I would watch for a lower move there, something like that. I would look to perhaps put on a third of a position there if I saw some support. And I wouldn't recommend that to everybody, but that's me. Then this would pop back up. It would perhaps do something like this. And again, watch just the blue line. It would do that, and there's your reversal pattern, a little inverted head and shoulders. Or here's another reversal pattern. That's a very high probability reversal pattern. Here's another high probability reversal pattern, a double bottom. I see something like that, a W bottom, right? Now, is this a double bottom? It could be. It could be. We are expecting higher prices here, and so you know, there's no sure thing in trading ever. Okay, so you have to be careful in terms of your entry and your stops. Now, if I took the long and it broke to the downside and I got taken out and I lost the 35 ticks, I wait. I wait for the next setup. I wait for this. I wait for the double bottom. I get long again. Okay, so the trade in oil to look for at this moment is a long, and you have to look at the potential reversal setups and trade it appropriately. And I think the thing about trading is this too, guys. You have to look at trading is about finding the extremes. Okay, so you know, when we were at the limit down, for example, you know, a couple of months back. And we knew that was going to be 1870, right? Everybody knew that's the limit down, 5% loss, you know, trading stops, right? So that's an extreme, right? Or when you punch through a Bollinger Band on a daily basis, that's an extreme, right? Those extremes are where you get your best setups, okay? So very often it's best to wait for an extreme. Then you can actually get a good setup and actually make a great trade. I think that's just a piece of advice. Okay. All right. What RSI value? Okay. What if it breaks out and runs? No reversal back test. Then Josh, you let it go. You don't chase it. You never chase a trade. Okay. You say to yourself, well, okay, I missed that one. Let me find something else. By the way, there's always something to trade. You just got to look. You know, and I like to look across the market and find different possibilities. Okay, let's go to metals and let's do a couple of these in metals. Now, Josh, there is a way to trade a breakout. I don't recommend it unless you're a very good trader, which would be to, on the breakout, you put on a third. Okay, and you have, and let me just go over this for oil as an example. Okay, and I've done this before with oil, and I do this with RBOB when I trade RBOB. So here we have the setup, and what would I do? The minute we go above the trend line, I put on a third of a position, okay? And I have a stop, and I know where my stop is, and I know what my risk is, and I'm risking 1% of my account. I'm not risking a lot, okay? Now, it begins to make tracks, and it begins to break out. Let's say that we hit the second standard deviation Bollinger Band here, okay, on an hourly basis, which right now is 42.49. What do? I add. Why? Because maybe we're going on a band ride, and I take a little risk, and I add. And what I do is when I add, I put my stop to even, okay? So we break out, I put on a third, we hit the first standard deviation Bollinger Band, and maybe the Bollinger Bands are leaning up, okay? And I put on a second third, okay? And I let it run with my stop at even, back here at the trend line, okay? If I see resistance, for example, somewhere, I take off a half or a third, okay? And like for example, if I were trading this downturn, we had the W, if you remember, and then the X, and we said from the X here, we said expect 40s. Okay. Now this contract has rolled, so you know this is actually 39s on the previous month's contract. But you know what I would do is this. I'd wait for the low if I wanted to trade this way. This is a more risky way to trade. Okay, if you're day trading, especially, this works well. So at this low, we hit the back test. I wait for a confirm. The confirm is when this low breaks. Okay, so right here, I would have gotten short. Okay, I get short. I wait for the back test. There's the back test. I add, and it goes lower, and I back test again to the trend line. What do? I add. It goes lower. It back tests to the trend line. It breaks the trend line. I get out of a half or a third or whatever. It goes lower. It breaks the trend line again. I get out of the trade. Okay, so there's a way of trading that isn't as conservative as what I'm recommending. It's what I call breakout trading. So you break out either at a new high or a new low, or even breakout trading out of a triangle. You put on a third, you have a level where you know you're going to add on a back test that goes 50% back and then fails. You add and you press the trade and you add to your winner. Okay, a lot of guys do that. Day trading, and I recommend that for day trading only, not swing trading, because swing trading, oftentimes you're not watching the market. Okay, oftentimes you're not watching the market. Okay, so let's go to another instrument. And guys, if you have any other questions, please post them. I'm going to do one more instrument and then I'm going to take questions. And I'm trying to answer them along the way as well, because I think it's useful to keep this interactive, okay? All right, that's platinum. Let's go to one of my favorites, copper. Okay, not a lot of you probably trade copper, but it's a great instrument to trade. I love it. Okay, let me make this a little larger so we can see it. Okay. Now, let me expand this a little. Okay, you can see the chart short term on an hourly basis. All right, now, same question. Is there a setup there? And would you trade it? What do you guys think? What do you see? Okay, let me just scroll down here and see. Triangle to the downside, Alan. Yep, triangle again. Very good, Steve. That sure looks like a triangle. I have it marked as one as well. This thing should break to the downside, and I would agree with you. However, my thesis, and by the way, you always have to have a thesis, okay? We're very close to a turn in copper, okay? So if I'm going to trade this, I would trade this only on a day basis, okay? There's not a big swing here, guys. There may be a lower low here, but and the way I would look at the first target for the low is this way. I would say the potential swing could go at least to 205, okay? At current price now, we're at 207, so, you know, that's $2 in copper. That doesn't excite me as a swing trader, okay? What excites me as a swing trader is the long, okay? So I would wait for a setup. Now, what setup would you be waiting for? Given what you see right here, and given that you have determined, Alan and Steve, that this is a triangle to the downside, what would you wait for? What sort of setup would you look for? Yep, okay. Double bottom, Alan, very good. And I didn't understand, you said retrace, Steve? I'm not sure what you mean. Or inverse head and shoulders. Yeah, very good, very good. So, you know, we wait for decent reversal patterns, right? I mean, that's what we do as traders. So here we go. There maybe it goes to our target, or, you know, my luck, how it is sometimes, is it goes through my first target. And, you know, we put in a reversal pattern that looks like this. Watch the blue lines only again. It's easier for me just to draw the blue lines. And we get that, which is, by the way, Steve, there's your, I'm sorry, Alan, there's your inverse head and shoulders, or we get a double bottom. Okay, we could get that. So, you know, you see a reversal pattern like that. Well, hey, you know, I wait for the retrace and the retest, and boy, my risk here is nothing but my reward on a swing trade here. Boy, it's great. Okay, and I go through the same process. What's my daily basis again? Daily basis right now, what is my average true range? Have I set that up? I haven't set that up here. I look for my average true range. What is my average true range on copper right now? Average true range, which is an indicator of volatility, is 4.48. I take roughly a third of that. Okay, I go back to my detailed chart, and I figure out where I want to enter and where I want to put my stop, and how much of my account I'm willing to lose. What's my ante for the trade? Okay, and again, I would look at this swing here, and I'm just going to show you this again, and I always do this, guys. It's very important to do this before you put the position on. Okay, let's say I'm playing this as a double bottom. Okay, and I'm going to set my stop below this low, and I'm going to get long right here. Okay, and nobody mentioned double bottom, but by the way, this is a potential double bottom as well. And let's say that I want to wait for this trend line to break before I put the position on. So the trend line breaks, I put the position on. When do I go even stop? This last swing here says I go even stop at 214.65. We hit 216 214.65, I go even stop, okay? And I take off a third and I put my stop to even, okay? Then I let the trade go. And that's really hard to do sometimes, but I let it go, okay? And then I watch it develop, and I watch my RSI price cycle, and I take off my second, third, and so on and so forth. Now, I haven't really talked about adding much to your position size. Let me just talk about that for a minute, because I think that's a very important consideration. Copper is great for that, okay? Adding to your position size. Let me just go to a larger time frame on copper. Okay, you can see how overlapping copper is. Okay, copper tends to overlap a lot. 50% retrace is our favorites for copper. So if you see this swing here, there's a 50% back test right there. Okay, here's another back test right here. Okay, so you look for your reversal patterns. Okay, so here's a double top, right? So we get into a trade there, and we let the trade go 50% of this swing, whatever that is. Okay, here we go, 50% of the last swing. Okay, comes in right there. So right here, I take a third, I'm even stop, I let the trade go. It comes back, I do nothing, I do nothing. And what I would have done here, and this is just my habit, is I will watch the RSI price cycle when it breaks. So I would be taking some off here, okay, and I let the trade develop, let the trade develop, let your trailers run, okay, really let your trailers run. So here we go. Look at the price trend line, right? Until we break that price trend line, I'm not taking off my trailer. I refuse to take off a trailer as long as it's performing well. Why would I do it? Here I take my trailer off, okay? And do I see a double top here? Do you see the double top? I get back into the trade, right? And what do? I set my stop to 50% of 50% of this swing here. Okay, we would have gotten through to that area. There's a double bottom right there. If I see a double bottom, do I reverse my trade? No, because I'm in a trade. I let the trade I'm in play out. So I've set my stop to even. Okay, let's say I got in up here. My trade is even stop because 50% of this move, we're through it already, right? I took a third. I have 2/3 left. I let it play. Have I gotten taken out? No. And it moves lower. And all I'm doing is I'm continuing to draw RSI price cycles like this. Okay. I'm drawing that maybe right there on that little blip. I would have taken out another third. Okay. And I'm constantly managing the trend, managing the RSI price cycles, and just legging in and out of trades. And that's really it. I mean, my system is very, very simple, guys. It's very simple. It's very straightforward. I try to keep it simple because I like to swing trade 4 or 5 instruments at one time, okay? And if you have a hit rate of 60 to 70%, you know, you might lose a couple, but then the other ones make up for the losses. And that's kind of how I think about it. Okay, so at this point, what I want to do, if you guys have questions, let me ask you this. If you have questions, put them in the room. If you don't have questions and you want to see a quick overview of the market, because what we want to do with these webinars is we're going to do a quick run through of the markets at the end. Okay, do you guys want to see a quick walkthrough of the markets now? If I just get an indication from a couple of people, okay, very good. I'm going to do a quick walkthrough, okay. The S&Ps, E-mini S&P 500. Okay, I'm looking at a 3-wave move higher. I'm looking for 2100s. This trend line is not broken. We are in a trend up. I am at a point right now where do you see this ceiling, this floor ceiling area, this dark blue line? I drew that in because this is support. This is support. We broke through it. It was then resistance, okay? And we broke through that resistance. So, you know, in a chart, I always mark my floors and ceilings, okay? So there's a floor here now. Might we come back to either this trend line tonight, like right about to there, or maybe might we come all the way back here to the floor tonight, maybe, okay? And then higher up here to 2100s or 2095s, I would say yes, that's possible. Is this the high? I doubt it, and the reason is there's not enough divergence. Ideally, what I want to see is something like this, okay? This will go a bit lower tonight. It looks like we have an A, B. I'm looking for a C down into one of these areas, and then I'll look for higher prices and a divergence, and that's my short right there. That's where I'm going to be looking for my next setup. We see the divergence. You can wait then for the lower high or the double or the double top, but my bias is I'm looking lower at this point. If I am wrong and price goes above 2100 with any force, then we are going to all-time highs. Okay, we're going to go to all-time highs. 2138 is a fortress. It is a brick wall. If we get through 2138, I will be absolutely impressed. Okay, absolutely impressed. Okay, let's go to the S&Ps. S&Ps are saying the same thing. We went sideways today. I want you to notice this neckline. Okay, here's your reversal pattern, right? We talked about that. Here's your neckline. Okay, we said here on Sunday, okay, expect 65 to 70. We saw it. Expect a pullback. We got the pullback. Weekly pivot. We said support. We're going to go higher at least to this area, to the neckline, and we said watch for resistance. Well, guess what? There wasn't any resistance. We went right through the neckline, and look what support is right now. The neckline is support. Now, what am I looking for? I'm looking for the 786 retracement on the S&Ps. Why? Because 786 is a favorite number on the S&Ps. If you've traded the S&Ps for a while, you know that retracements go 0.786 more often, in my opinion, than the 618, okay? So I'm looking for that, and that's at 2095. I'm also looking for 2093. I would like to see resistance there and then see this move lower. If we see support at this neckline again, or we see support at this weekly pivot, which is at 2045, we're still going to all-time highs, okay? So I just want you guys to be aware of that, and also there's a potential inverted head and shoulders here. So, you know, we could see a pullback maybe to 2066. That's another possibility once we hit this area up here. So, you know, is this bullish? Is this bearish? We broke the neckline, guys. That's a bullish sign. And the neckline right now, it's support. Okay, so I want to see what happens at 95 to 93 and see what the pullback looks like. The pullback will be very important, and it'll be definitional for me. Okay. Let's move on to the Russell. Anybody here trade the Russell? We have neckline resistance, okay? The Russell is behind everybody else. We're at neckline resistance. We're stuck between the neckline and the weekly pivot, okay? The dotted line here is the weekly pivot. We have broken the RSI price cycle. Notice that, okay? So what does that mean? Higher prices with a divergence is probably the next step. Okay, higher prices up to 1178 is what I would look for. Okay, that sets up a short. And what would I be doing? I'd be putting some on up here. I'd watch for the reversal pattern. I'd put some on. I'd set my stop just like I said, and I'd wait for a break of this trend line. Okay, this trend line has to break for the trend to break. So, you know, I'd be very cautious here in terms of I'd be very cautious here. I would not be putting on a large size here. I'd be adding to it as we broke the weekly pivot. I'd be adding to it if we broke the monthly pivot. 1140, if that breaks, I'd be adding to it, okay? NASDAQ. Okay, we called this number last night and we hit that number, okay? We are at an inflection point right now on the NASDAQ. The NASDAQ tends to be a step ahead of everybody else, so 5090. We have enough right there. We have a reversal pattern right there. That looks like a little bit of a head and shoulders on a shorter term basis. We have a break of the RSI price cycle. You could try a short here, but given what I'm seeing on the other indexes, I would hold off. We may see a marginal new high. You could put some on here and try it. It's a good risk reward here, let's put it that way, because you're not that far away from the top. So, you know, putting on a small position size with a stop above would not be a bad risk at this point. You may want to wait for a more defined reversal pattern. This one was a very nicely defined reversal pattern. 3 back, 3 up, right there, lower high. There's your reversal pattern right there. Very nice one. Okay, run through the markets. Oil, we just saw oil a minute ago. You know what's going on in oil. We got a triangle. Okay, if we break the upper trend line, then our thesis of going up here for the C is on. Just so you see the big picture thesis, I think we're in a triangle. okay? I see RSI compressing here, okay? So we have an A, we have a B, we have a potential C, D, and E, and then lower prices. I'm not convinced that we're done going lower in oil, okay? We're at the 3 back. From here, we have an ABC lower to the X. We called that beautifully last week, okay? That was a great trade. You know, this can go either way at this point. This is a 50-50 possibility. It's not a, you could try it one way or the other if you want and manage your stops appropriately, but for me, I'm looking for upside. I'm looking for the C wave and a retest of the monthly pivot right now, okay? So that's oil. And that's what I believe is going to happen next. Let's move on to, I forgot to do the dollar. I'll run through the dollar in a minute, but I'll do gold real quick. Not copper. Let's do gold. Okay, last night I posted that we are heading higher in gold, and I'm looking for something up into the 1130 area. So what do we have from the bottom here? We are about to see this finish higher, and let me give you a quick fib here. Just looking at the structure. By the way, I haven't done my detailed work yet, but basically this is finished in A equals C already. So I would be looking for a back test here, okay? And let me get a trend line started here. I would draw it like that for right now. So I'm looking for a back test to the trend line and then potential higher prices. So you know, I would be looking at this. So a setup here, possible setup. We have a shoulder, a head, a potential shoulder here, a little bit of an odd looking head and shoulder, okay? But if we see the trend line and we see support, that's along with maybe a stop below this area right here, okay? RSI price cycle is here, and as long as that holds, as long as price does not cross, as long as the RSI line does not cross below that blue line, guys, we have a long going on here in gold, okay? Now, caution is required because we're going up to the monthly pivot here, roughly speaking, in silver or so and gold, and then we're going to go see lower prices. So you have to be aware that you're in a counter trend swing trade, okay? I would prefer, just for your own safety and peace of mind, that you day trade this. I don't like the counter trend swing trade. It's a risky trade. I'd rather trade, you know, with the trend and capture the trend like we did with oil. Okay, we captured oil all the way down to 40 bucks last week, and I'd much rather be in a trade like that, more predictable, easier to trade. This is a counter trend trade. I think back up here you have another short to reshort metals. Okay, I am expecting lower prices in metals. And the last piece of the run through for today, and I think we're at an hour just about, perfectly timed, is the dollar. Let's take a look at the dollar chart real quick. The dollar chart is important if you trade futures because many futures are dollar sensitive. If you've been trading futures for a while, you know what I mean. So where are we? We have a 3 back perfect, okay? And that makes me sort of wonder what's going on with the dollar. But just to look at that, yep, perfect 100% back test. Okay, now from here I would not be putting on any short. I'm waiting for the retest. You see the gap right there? Okay, the gap and a back test of the trend line is very possible. 50% back would be roughly speaking to 99.38. That's something I would be looking for. 99.38 is not a bad short. Okay, that's something I would consider as a setup. And let's just apply what we learned today about setups, right? So we see 99.38. Where's the high? 99.95, 38.95. That's roughly, let's just say for my brain, 60 ticks or 60 ticks. Yeah, right. We have the ATR is 65 ticks. Okay. The dollar is a fairly cheap instrument to trade. So, you know, do you want to risk, let's say, a third of an ATR, which is roughly 22 ticks, or do you want to risk maybe 33 ticks or so, like a half of an ATR? You could do either on this trade. Or if you want to risk more and use a smaller position, what you could do is put on half a size and put your stop above, okay, and let the trade go. And where do you put your stop to even? Here you go. You start from the swing and you do this. You've seen me do it before. And 88, can't read it. I'll get to it here in a second. 88,285 is where I would take a third, put my stop to even, and let the trade go. Okay, and I want you to notice the RSI price cycle. We are in a small trend, and again, use your trend lines to know when you break out of the trend. So that's the trend line right now. And our thesis on the dollar, and you always have to have a thesis. Our thesis is we're in a triangle, an A, B. I'm looking for C down here to the trend line, down to 94s. Looking at a daily basis, okay, C, D, E, and then I'm looking for higher prices. From the E, I'm looking for 105s, okay? And that will be a major significant top in the dollar that we will not see for many, 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 many years to come. From there, I'm expecting it to break down. So we'll see how that plays out. That's probably going to play out into 2016 at this point. So, okay. A couple of other questions got posted, and I'm going to try to answer them. We're out of time, guys, but I'm happy to answer questions. So I hope you guys got something from the trade execution webinar. Okay, in future seminars, you're trading futures. Concerns of MF Global, or whatever. What research do you do in broker selection? Okay, I tried to find a broker who doesn't invest the money. Okay, MF Global was a trading firm and a brokerage. Okay, and yeah, I don't put my money there. I go with very, and by the way, I have 2 accounts, so my money is split between different accounts, and I ensure that they just are a brokerage. Okay, they don't do anything. They don't have their own brokerage. In other words, okay, they don't do any trading with the money. I think that is a risk, okay? So now, the other thing that's very important too with a brokerage is to make sure that they are a substantial brokerage. There are a lot of startups out there. Not startups, but small companies, okay? So, you know, you get a small brokerage out there and you could get yourself in trouble, okay? So try to break your money up into multiple accounts if you have a substantial investment portfolio and spread it around. And I like to have my portfolio, Steve, organized in a way where, you know, I have my longer term stuff, I have my day trading stuff, and those are typically split up. Okay, so I swing trade out of one account. I have a day trading account that's used exclusively for that. They're in different brokerages, and that's just kind of how I do it. Okay, your swing trading copper theory is long, but the 4-hour chart is firmly down. Okay, Steve, here's why. First of all, we are in a trend down, and you are absolutely correct. We have been in a trend down for a very, very long time. I am calling for a break of the trend. Now, are we ready to break the trend in copper? Not today, okay? It's coming. Let's go to a daily chart and a weekly chart, and you'll see what I mean. Here's my copper daily. Let me just scrunch this in a little bit, okay? Let me go to a weekly. A weekly is probably easier. Okay, look at the weekly. Okay, we have this falling wedge. Now, a falling wedge is definitely going to break to the upside. I mean, we know this trend is going to reverse. Now, what I have in here so far is 3 waves down for a W, 3 waves back for an X. I have a black WX, YXZ for the Y. Here's your back test to the X. It came right back to this declining resistance trend line. And this is the last leg down. Okay, we are in the last leg down. Look at the divergence on a weekly basis. It is beautiful. It is absolutely beautiful. So the weekly chart, if you trade a weekly chart, and some guys do, you know, they're long copper and they don't care if they get punched in the face. Their stop is 0. And they're just going to put some on and let it go. And that's fine. And not everybody can do that. But, you know, I start getting interested right now because we're in a bullish overthrow of this trend line right now. Okay. Now, could this turn into a channel? Well, yeah, it's possible. If I'm wrong about the wedge, here we go, then we have a lot lower to go in copper. Okay. I don't believe that's going to happen. Okay, I see this divergence here, and I see that there is not a lot of strength in this move on a weekly basis. Okay, we have divergence on a weekly basis. That's a significant sign. Now, does that mean it turns in the next hour? No, it does not mean it turns in the next hour. It means that in the next week or two, this thing is going to turn. Now, I go down to my lower level charts, and if I go down to the 4-hour chart, for example, what do I see? And let me kind of expand this and give you the rest of it. Okay, from this X, I have a WX and I have a WXYXZ right to here. Okay, so there's an end of impulse that's imminent. Okay, there's an end of impulse here that is imminent. Here's what I'm talking about. Here's the low in RSI. I'm expecting a divergence right there. We've broken the RSI price cycle. Okay, so a little bit lower here, a little bit lower. And by the way, remember on a short-term basis, we were looking at a triangle, right? Triangles tend to mark bottoms and tops. Okay, so you see a triangle, and I've seen this on so many charts across so many instruments in the marketplace. It is like one of the most consistent patterns that I know. You get a triangle, you get a thrust out of the triangle. The thrust marks the bottom or marks the top. Okay, so that's what I see. And by the way, I could be wrong, because if you look at my count, let me go back to the 4-hour chart. Okay, so here we have a black W, a black X. This would be a black Y. Is that enough to end the gold X, which is the bottom in copper? Yeah, that could be enough. Okay, I'm going to be trying along here for sure. Once I see this thrust and I see a little bit more downward movement, I'm going to try along here for sure. And I'm going to watch the bounce. I'm going to see what happens. Now, where would I expect it to bounce if we're going to go lower? Well, I would expect it to bounce no higher than right here. The bounce could come up to the W or between the W and the X. That's it. It should definitely stay below this trend line. Okay, so we're close to a turn in copper. There's no doubt about it in my mind. Could we see a bounce and then a marginal new low? Yes, we could. Okay, or we could see a turn right here and go and put in a reversal pattern. I don't see enough of a reversal pattern here to get me interested in trading it. So that's my whole thing about copper. Okay, guys, that's the walkthrough of the market. I think that's it for the webinar. I hope you guys found this useful. Any other questions from anybody before I sign off? Okay, Jack and I hope you enjoy these webinars. Jack will be back next time, and our next webinar, let me just tell you about it real quick. Our next webinar, we are taking Thanksgiving off. Okay, so no webinar next week. We're going to get into Elliott wave and retracement patterns. And retracement patterns have a lot to do with reversal patterns. So what I want to do next time on December 3rd is walk through Elliott wave and talk about pullbacks and retracements. Because if you're a trend trader, okay, if you're a swing trader, the important thing to learn is wait for the pullback so I can capture the next leg in a trend. Okay, and what do retracement patterns look like, and how do I get into them, and stuff like that. We're going to cover that sort of stuff. Okay, so priceless stuff. Okay, thank you, Brent. Hey, Len, thank you. I appreciate a great webinar. Yep, thank you, everybody. And we'll see you next time. So the next webinar is December 3rd. Everybody take care and trade them well.